We've done quite a few offerings where it's just, I'm going to use the term, it's just debt. People put in their money, they don't really get any ownership of the property, but they get 7, 8, 9% return every quarter. Well, you can't get that in the bank.
No.
And if you're in a position where it's secured by a good piece of real estate, if that's what your goal is, that's a great investment.
Welcome to the Share the Wealth Show, where minority professionals can learn to escape the racial wealth gap and catapult themselves into abundance. Your host, Nicole Pendergrass, grew her net worth from being negative to multiple six figures. Join her on her investigative mission to expose secret strategies of the wealthy so we can all have the tools needed to build the life and legacy we were created to possess. Now it's time for the show.
Hi, everyone. Welcome back to another episode today of the Share the Wealth Show. And today we have a very unexpected guest. It is Mr. Gene Trowbridge. He is a syndication attorney and has actually come on and talked to us a lot about the process of not just syndication, but if you're going to be a passive investor, what questions should you be asking an operator who's presenting an opportunity for you? What are the 4 most important questions for you to ask in order to protect yourself, protect your money, and know that the operator is going to do right by you and with the deal? So Gene he has years and years of experience. He started as a syndicator. He raised money first. Actually, he started as a broker, I believe, a commercial broker. And then he turned into, after investing a couple of times passively, he said, I could do this. And he became a syndicator. And he syndicated for years. He actually did a lot of ground up construction with self-storage units. And then at some point decided, you know what? I don't really want to do this anymore. I want to switch gears. And he went to law school and became a syndication attorney, and everyone in the multifamily space uses him or has heard of him. So very big name that we had on today, and I'm very excited to bring him to you guys. Let me just catch up a little bit more on his bio. He has been in the commercial and real estate investment business continuously since 1972 and has been an attorney since 1996. After his CCIM designation, he continues to serve as a member of the CCIM faculty, and he actually is really big on education and educating people on real estate and syndication and making sure that he has mentorship and all of that as well. A lot of his YouTube channel he mentions in the show has a lot of information and interviews with other people and just educates you on what it means to invest in a syndication, how syndications work, and make sure that you're doing things correctly and by the book. So you do not want to go to Securities and Exchange Commission jail. In any case, he is a member of the California Bar. He lives in California right now. He has his own law group, Trowbridge Law Group LLP. And as a former syndicator, he was raising capital for 10 years. He sponsored 16 investment groups. He was raising equity from investors through registered representatives and brokers in the broker-dealer community. And he actually sent out over 1,600, almost 1,700. That's 1,600 K1s in a single year. What's a K1? A K1 is a tax document that you get as a passive investor that shows your income and losses for you to file taxes with. In any case, I'm rambling. This show is jam-packed with information. Please listen to the whole thing. He brings years of experience and knowledge and insights, and he actually taught me a bunch of things. Actually, I learn things every time we have an episode or every time I'm talking to a guest. But today is no different. Stay tuned. Hello, everyone. Welcome back to another episode of the Share the Wealth Show. This is the show where we learn how to create, grow, and protect minority wealth. And today we actually have with us a very special guest. Mr. Gene Trowbridge is here. And if you guys don't know who this man is, you are in for such a treat. He has a wealth of experience, years of knowledge, and he's really going to break it down and share with us a lot of his insights in the syndication space. So, Gene, welcome. Thank you so much for joining us today.
Well, thanks, Nicole. I'm glad to be here, and I love the way you position that. He has years of knowledge. You just let that word years flow out. I loved it. And that's good. So that's one of the things, when you talk about wealth, wealth can be a bunch of things. Wealth can just be knowledge. It can be money. It can, it's all sorts of, it's the wealth in having a happy family. I've been married 50 years. And I owe that to my feeling that all the great decisions in life, Nicole, are made around the kitchen table. And when I got married to Kay, that's what we started to do every day, at least once a day, and we still do it. If I'm not traveling, we still do a sit down to talk about what's going on. And in life, some of the things, over 50 years, some of the things are tragic and some of the things are magic. And if we're always talking about what's going on, things kind of even out. We can deal with the tragedy because we know it's coming, or we think it's coming, and we can get excited about the magic, but it doesn't hit us like this, and we're comfortable. So that's what I think. Wealth has all sorts of meaning. But let's talk about money.
Okay. And I completely agree. That was such a wise insight right there. Wealth is not only about the financial aspect. Wealth is well-rounded with a lot of different things and aspects of your life. And it's all how you view it. It's all relative, right?
It really is terrific. I've had 3 careers, really. My first career was a commercial real estate broker coming out of college. But the biggest thing I could sell and make a commission on was real estate. I couldn't sell airplanes because I wasn't an engineer or big rooms of computers. So I went to sell real estate, totally driven by the commission. I didn't know anything about real estate, but I did that. And then I found through investing myself in a couple small deals that I had a lot of people I knew who would like to invest. But they didn't have the time, they didn't have all the money, they didn't have the skill to do it themselves, but they knew me and I was developing some expertise. So they thought, well, if Gene's found something that was an opportunity, maybe I'd invest with Gene. And that's really the trick of being a syndicator. So I did that for a long time. And then, as I say, the care and maintenance of partners will soon wear you down. And one day around the kitchen table, I said to my wife, came home at lunch, I said, I've had enough of this. I've always wanted to go to law school. So at 45, I started my 3rd career. I went to law school, and I don't know how good your math is, but at 45, I went to law school, and for 30 years, I've been an attorney in the syndication area. I don't do divorces, wills. I don't do anything. All I do is try to help people be good syndicators, which in turn helps their clients, their investors, generate some wealth.
Wow, that's very impressive. And I was going to ask you to give us an overview of your background, and there it is. So impressive. Okay. So you mainly stopped syndicating just because you were tired of handling or dealing with partners and other people and just wanted to go out and do on your own.
Nicole, I got to a point where I had a challenge in my business. I really was challenged to do bigger deals. I was raising my money through stockbrokers. And the stockbrokers came to me and said, your deals, I was raising $5 million at a time. This was a while ago. Okay. Mm-hmm. And they said, $5 million, we raised that so fast. We like your deals. We want you to do $10 million deals. Well, I had a philosophy that I had enough money to do the deal that I was going to syndicate, at least for a short period of time, myself, just in case the money raising didn't go as fast as we wanted. Because you don't want to raise money and give it back to people and say, well, if this didn't work, wait for the next time. Because they're not going to wait for the next time. So that was one of the discussions I had with Kay. I said, now they want us to commit $10 million. And whether I had it or not, they wanted us to commit $10 million as part of their due diligence. Gene, can you close this deal if we haven't raised all the money yet? And I said, I don't want that risk. And that was my whole sales force. I didn't have a Rolodex of investors. I had a Rolodex of stockbrokers that I could call on. And now if they weren't going to do it because it wasn't a $10 million deal, I thought it's a perfect time to do something else. So I went to law school. So it was a challenge. But your point is well taken. The last year that I was fully enveloped in that, I sent out 1,687 K1s to investors. And that's a lot.
You said 1,600?
1,687. It's a lot given the fact there were no companies that would help you do that back then, like there are today.
Yeah.
Totally different picture if we were syndicating today. And so that was a lot of licking envelopes, putting stamps on them. And so I could just see if I grew my business, I'd have to have more staff, more office space, more lines of credit, all those things that would be important. I just thought, no, I'd had enough. And since we're talking about wealth, I had made some money and I had probably 5 or 6 years of income streams coming from the funds that were completed at that time, which really could afford me to go to law school. Law school is not cheap. And it takes a lot of time. So I knew I was going to have to slow down and work and see this money come in. Kay was still working. We had kids in school, and I'm going to go off and have a midlife crisis and go to law school. So it was the perfect timing to do something I always wanted.
Okay. I love it. I love that. So I guess I'll just go ahead and jump in because my listeners are in that process of learning to build wealth. And I'm exploring a lot of different alternative strategies, things that are not traditional, not your normal investment stocks and bonds and your retirement account. And I'm trying to get people to look outside the box and see avenues that they may not realize are there, or wealth building strategies. So as a real estate investor myself, and I'm actually getting started with my first couple of raises. So I have a long journey and career ahead of me in that regard. But for the people who are either nervous to do syndications, actually, I want to dig into the bad side of syndications. So I don't know if this episode is really going to help or hurt, but any knowledge is good, right? It'll help you be aware of what to look for.
We don't want to scare everyone away.
No. But I want you to be prepared.
Yes, with your eyes open. It works.
Yes.
I mean, I've got a series of questions that we'll get to that I think everyone who's listening who might want to invest in someone else's deal should ask. And then I think if you're one of those someone else's, you better know an answer to those questions. So it's comfortable. Well, as I said earlier before we started, I'm kind of a one-trick pony. I'm a real estate guy from day one and in syndication where people who don't have enough money to buy their own real estate, they don't have enough time to manage their own real estate. They don't necessarily have the knowledge necessary to do that, can pool their money with someone who does have some money, some time, and some expertise, and goes out into the marketplace and finds some opportunities and brings the opportunities back to the investors. I learned a long time ago as a syndicator that I really wasn't selling anything. I was saying, well, what I was doing was building self-storage facilities. We built a lot of 32 self-storage facilities in Southern California. And so the opportunity we had there was to take a piece of dirt, identify where there was a need for self-storage facilities, build it, and then sell it. We never wanted to be in the business of running self-storage facilities. I didn't want my investors to count on me for a check every month so they could buy groceries. I was looking for investors who wanted to build their net worth. They could find their income somewhere else, but they wanted to build their net worth. So if in a year, 2 or 3, I could take their money and give them back 150 or 200% of their money, I met their needs. And so I had to find people who saw that as an opportunity and saw the fact that I had assembled a team that can capture that opportunity if we all invest together. And I think that's very important. If there are some people listening like you who are about their first money raise, you're talking about your database. You're talking about the people that you can talk to. I think in developing the database, I would go in this direction. I would find people who are interested in real estate. Do you really want a lot of people in your database that are interested in blockchain? I don't know. But I think you want real estate, right? Yeah. And then you want to tell them what area of real estate is it that you've identified that provides opportunities. Now, not everyone wants to invest in storage facilities or retail or apartments, but people want to invest in different things. So you have to figure out where the opportunities are, and then you have to assemble a team that can capture those opportunities. And then you have to tell people, these are the opportunities, here's my team, and then finally, here's my offering, okay? When I started, all I had was, I just got the offering booklet from the attorney. I'll go out and sell this. Well, I didn't know I was talking to people who wanted real estate or wanted the development risk of real estate or wanted to build their net worth as opposed to cash flow. Mm-hmm. So I quickly learned what I needed to do in building my database with really stockbrokers who had clients who were looking for equity buildup and net worth. So that's a long story, but I think that's what you need to do. So now we've got 2 players in the game. We've got people who need the help of a syndicator, a sponsor, because they can't do it themselves. There's nothing wrong with can't doing it themselves. I know fabulously wealthy people who are in 20 or 30 deals with other people. They wouldn't think of being the boss. And they're doing extremely well. In fact, they retire from being a passive investor in other people's deals. And then I know people who after 1 or 2 deals say, I can do this and I want to make that part of money. So it's a pretty interesting world that we find ourselves in, Nicole.
Yeah, I agree. And I think that also hits on a point that there are so many ways that you can go after wealth building, whether it's even just in the real estate industry. There's so many different avenues you can take. And like you're saying, if you want to be passive and create that data, or you want to be active and create that database and find the team and find the offerings and the opportunities and all of that. But then even if you want to be passive and you want to be that passive investor and just invest in all the deals, and to even get to the point where you can retire from being a passive investor, that means you've done very well over time. Another thing I want to point out that you mentioned, and I don't know if it's gone over the listener's head, is that as a passive investor, there are different strategies based on different asset types, and you need to know what you're looking to do. Or do you want cash flow? Then a ground up development deal is probably not good for you. If you want to build wealth and you just want your net worth to grow, then a ground up development could work because you're not looking for, like Gene said, the money to buy your groceries. So there's different types of commercial real estate products. And they offer different types of monetary value, whether it's monthly, whether it's quarterly, whether it's in a couple of years, but you have to wait. So you really should sit and think about what you want to do and what you want to get out of your wealth building journey, what you need the real estate to do for you when you're deciding on what kind of operators and what kind of assets to invest with.
And in the last couple of years, Nicole, we've done quite a few offerings where it's just I'm going to use the term, is just debt. People put in their money. They don't really get any ownership of the property, but they get 7, 8, 9% return every quarter. Well, you can't get that in the bank.
No.
And if you're in a position where it's secured by a good piece of real estate, if that's what your goal is, that's a great investment. It's really wonderful. Well, we've all heard that so many people who are really wealthy in this country made it through real estate. That's fine. But there are a lot of people who made it through inventing websites and medical devices and all that too. So real estate isn't the only game in town, but unfortunately it's the only one I can really talk about. But we talked earlier, what am I investing in today? Well, right around the time that the pandemic started and the stock market was on a rampage, which it really has been for the last 3 or 4 years, I converted just about everything to cash. So I'm a little older, and risk is something I'm more concerned about than I used to be, because I don't have time to make my money over again if I lose it. So I'm in cash. And, the yields aren't so great, especially today with inflation being at 8, and you get a yield of 2 or 3, you're really losing money, aren't you? Well, that's fine. You can lose a little bit all the time, or you can lose it all at once. I'd rather lose a little, right? For me, for my family and my situation where I am, this was the right thing to do. And I guess there's another deal. I have a lot of clients. I probably have 800 different clients, and they all have wonderful offerings. I can't invest with any of them because it would be a conflict. I'm the attorney, and if I invest and something goes wrong, then they're all going to be after me. So I don't, and so I'm so busy on deals that I know the sponsor and I know the deals. I don't have time to go out and look at anyone else's deals. So I just said, well, I won't do that anymore. For a couple of years as an attorney, I was still buying my own real estate, and then that's a problem. Time management, cash. So I went to cash. On my YouTube channel, I have 37 interviews, Nicole, with people who are my clients, and I ask them the same 3 questions: how did you get started? What do you think is going to happen in the next 3 years with your business? And what advice do you have for rookies? Okay. And the most important answer is, what advice do they have for rookies? Well, no, I guess the most important answer, the first one is, I got started because I didn't have enough money to buy all the real estate I wanted to own myself. So I needed to reach out to other people to invest with me. That's how everyone got started. And then, the last one is, this is not something you do by yourself. You need to have a team. If you're going to manage other people's money, heaven forbid the risk if you decide that you're going to do it all by yourself.
Oh, yeah.
We've had sponsors die during the last 3 years. COVID, gone. What if they had been the only person who could sign documents, who could make decisions? What would have happened to the investors?
Wow. And actually that leads right into something else I really wanted to touch on, is for all the people who want to be passive investors who are listening, what should they be doing to vet potential sponsors, and what should they be asking? What should they be looking out for? And I guess after that, I'm gonna go into maybe the biggest hiccup you've seen happen over your time. Just to share what could potentially go wrong.
Well, I've already mentioned the one. I'm going to give you the 4 questions I think an investor should ask.
Okay.
And you're going to be surprised, because I'm not going to mention cash flow. I'm not going to mention net operating income. I'm not going to mention any of that. Before you get too involved in the offering documents and the mechanics of the real estate, first question, Nicole. Nicole, if I give you my $50,000 to invest in your deal, what happens if something happens to you? So my firm won't write securities documents. Nicole, you came to us and said, I'm going to do a deal and I want to be the only managing member and the only general partner, I won't take you as a client because I think that is way too risky for the investors. You need some continuity. And I don't know how we work that out, but everyone is different. And you've got to have some continuity. The lender is basically going to require you to have that. Your investors, I would never invest with an individual sponsor, number one. Number two, hey, Nicole, have you done this before? And all of us have had to say no to that question. Before I did my first deal, people asked me, have you done this before? I said, no, this is my first time. But I must have something else going on in my life that would make them want to invest with me. So to start out with, you better build that background story. And then after you've done your first deal and they say, hey, Gene, have you done this before? You say, hell yes, once. But that's the start.
Yeah.
And then the third one is, Nicole, are you going to invest any money in this yourself? And or skin in the game, however you want to use the terms. And I used to think the only thing that was important was the cash flow or the cash investment of the syndicator. But today, syndicators are signing mortgages. They're signing mortgages for full recourse. They're signing mortgages for partial recourse, for carve-outs. So they do have a skin in the game. And you need to be able to tell your investors, yes, I'm in there. I'm in there with you. And then the last one is, Nicole, if something happens in my life where I need liquidity, how do you handle that? And the answer there is that the operating agreement has a couple articles in it on liquidity, whether it's voluntary or involuntary. And you as a sponsor should read that and be able to answer that question and go over it with your investors so that they're comfortable with that. I mean, this whole thing of buying units in an LLC, what is that? How does that work? How do I get out of this thing? So you have to be able to make your investor comfortable that there is a plan in case they need it. And so those are the 4 questions I think you should ask. And then the question is, do you know anything about real estate? We're supposed to take money from sophisticated investors. Who's going to make you sophisticated if you're going to invest in multifamily? Where are you going to get the education? Is it the syndicator who's going to educate you? Probably not. Are there podcasts like this that educate you on multiple family? Sure. Are there trainers out there who you can sign up and take their courses? Can you read books? How are you going to get sophisticated enough so that when you read the investment documents that you know what's going on? And I think that's important. And one of the hiccups that I'm seeing today is a multifamily syndicator who decides all of a sudden they're going to go into mobile home parks. And they take their money and their investors' money right over into mobile home parks. That's a different game. I went to a mobile home park educational training once where one of my clients is a big mobile home park developer. And they had a 2-hour presentation of a video that was made inside of the factory where they make mobile home coaches. It's amazing what goes into making a mobile home. And it's different than a 2x4 and in insulation in an apartment building. So how do you know that the sponsor is sophisticated in that, or that you as an investor are sophisticated? We're only supposed to deal with sophisticated investors and accredited investors. So how do you know? So I think the investor has a responsibility to get educated on the product type. I think so. We've all lived in an apartment building.
Yeah.
That's why one of the reasons apartment buildings and multifamily are so popular to invest in today. We all understand there's a water heater, there's a stackable washer dryer. What's inside of a self-storage facility? A lot of metal walls, tilt-up concrete, metal walls, one bathroom. What the hell? So
yeah. So I have a quick question then. With the concept of sophisticated investors, I feel like a lot of my listeners would be sophisticated investors, but mainly, let me rephrase that, will be non-accredited investors. Whether or not they are sophisticated is the question.
Right.
What can they do besides, like, is there a certain time frame of education that they should complete? Is there any court? Like, what is it that takes it to make them become sophisticated enough to invest in an offering?
Well, that's a good question. We build something. The third document that a securities attorney would develop is something called a subscription booklet and an offering questionnaire. So in the offering questionnaire, I'm going to ask you, what have you invested in? What's your job? What's your education that makes you ready to invest in real estate? And I'm going to really be the judge of that as the sponsor. There is no bright line. The bright line really is, I guess, do they know enough about the investment to understand the risks? That would really, if there is a bright line.
Okay.
And so you'd get that knowledge by being able, can you read the documents? Do you understand the product? So it's really difficult. But once again, there are programs out there where trainers train you to be good investors. I know several programs that all they do is train you to be a passive investor. Whether you're going to go for a weekend, you're going to learn all about multifamily. You're going to learn all about mobile home parks. And no attorney is going to stand up and talk to you how to be a syndicator. All they're going to do is give you product knowledge so that when you look at an offering, you can tell. That's kind of interesting. Oh. But you're back to your story and your great podcasts about building wealth. I think some people, I have said this in the past, not everyone is equipped to be a syndicator. Some people are just better off being passive. And not every property should be syndicated. Risk is a big deal. But I think the thing that I like to talk to people about is the syndication business is a people business, Nicole. Mm-hmm. You do 2 or 3 deals, and all of a sudden you have 100 investors. Now you've got 100 investors who are your best friends, whether you want them to be your best friends or not, Nicole. And, we had, when I sent out 1,687 K1s, I had 850 investors. Okay. And the minute anything goes wrong, they come to you because you have their money. Well, you don't have their money. The money is in cement trucks, pouring concrete slabs to build tilt-up storage facilities, but they want to visit their money, and they're going to visit you. That'll drive some people out of this business. At some point in time, it was a part of my decision to leave the business. That I just, I've got 850 now. What would I do with 1,600 investors? God forbid. I think I'll hide.
No, that's very true. Well, this has been a lot of good insights and information, and I feel like the people listeners out there, got a lot from it, especially whether they want to even be active, the people who are listening who are on that path, or the people who just want to be passive. Now they know kind of how to vet your syndicators and make sure you're looking at documents. You know now that there's courses out there that can help you learn everything. Well, not everything, but a lot, give you a crash course on passive investing and multifamily or other commercial types as a product and what to look for. So you can start to become sophisticated if you want to be
YouTube
interested.
Channels.
Yeah.
YouTube channels. There's a bunch of people out there who know the products and have YouTube presentations. And that's how you can learn.
YouTube University is great. I love YouTube University. You can learn a lot on there. Whether or not everything is true, you have to vet that yourself. But
everything on mine is true.
Okay. So everyone look at Gene's YouTube channel. We will have it in the show notes. I'm going to study his channel too, because I need to hear all of the interviews and everything that he has going on there. Wait, don't go yet. Have you been looking for a way to get started in real estate investing, but you just don't know how? You need the Launchpad. It's brought to you by my company, Norvest Holdings. And the Launchpad is a free guide with a ton of resources I've compiled to help you invest into your first real estate syndication. It includes terminology, book resources, video explanations, all the information that you need. Don't know what a syndication is? I got you covered. How to find a good operator, how to even tell if a deal is good or not without having to know how to underwrite it all. It's all in there. The Launchpad is designed to help launch you into the next stage of your investing career and get you invested into your first multifamily syndication as a passive investor, meaning you can be a landlord and own a piece of a large apartment building, but still go about your day-to-day life without having to stop and learn every single detail about what's under the hood and how it all works. The link to the guide is in the show notes. Make sure you sign up today. Again, this is a free resource and guide. And if you have any questions at all, please feel free to reach out to me. Now let's finish up the show. Well, Gene, I really appreciate you coming on, and I'm actually going to ask you the final 3 questions that I ask every guest. So the first one is, Warren Buffett said that diversification is protection against ignorance. What does that mean to you? And is diversification a good thing or a bad thing? What do you think he meant?
I think it's imperative. And my example is, you put all your money in one property and it goes bad. You put all your money in 3 properties and one of them goes bad. Which would you rather have? In 3 properties? So you've got to spread the risk and be diversified. Yeah. In fact, when we were syndicating, we built 2 storage facilities in each offering, just in case.
Smart. Super smart. Have you played Monopoly before?
Sure.
Okay. Now, Baltic is one of the cheapest properties and Boardwalk's most expensive. In your strategy to win the game, which one are you looking to buy first and why?
The railroads. Because there's one on all 4 sides of the deal. Yeah, that was always fun. No, I don't think you can start at Boardwalk. I don't think you can. I think that's a mistake that you can make. I guess I haven't played in a very long time, but it seemed to me that the more properties you bought, the better off you were than just simply buying Park Place and Boardwalk.
Okay. Understood. Actually, I like that answer. You're the only person, and not the first one to go like outside of the box and say the railroads. I love it. That just shows your mindset. Don't stick with the status quo. Think outside the box. That's what I'm trying to teach everybody here. Think outside the box, people. Okay. And so I don't know if this is question because it kind of seems like you are where you want to be. You love your career right now. You're doing it because it brings you joy, and it's what you do and what you know. But my last question is also, what's the one thing you need to take your business to the next level? And what is the next level? Is there one?
I'm in a mindset of legacy. Okay, Trowbridge Law Group. Will that go away when I retire? I hope not. I have a law partner. I have another person in the firm who's in his 2nd year of law school who wants to come in. And there are 5 other people who make the business run. There's no question I'm the rainmaker, but I don't want this thing to go away. We've all worked. With my group of people I have now, we've all been together like 8 or 9 years. I want to make sure that there's something after that. So right now I need to get Tim through law school. And so I have 2 partners, and we have a good social media presence. She'll continue on. Dave, our office manager, will continue. I just need to make sure that things are okay with them. And I think the name, even if I slow down a little bit in trying to generate business, I think the name will still be strong. And I want the name to be strong so that all my existing clients keep coming to the company, whether Nicole does their legal work or Jonathan does their legal work. There's still some aura Trowbridge. So I'm legacy wanting right now. Does that make sense?
Yeah, definitely. It makes perfect sense. And I think I mentioned to you when we first got on the call, I don't know if we were recording then or not, but that your name rings bells in the multifamily sphere. Like you are, the person. Everyone knows who you are. You know what I mean? And so that right there already creates a legacy, because we're just all like, it's a small community. Even though, there's people all over the country who are doing this, your name just goes across and everyone knows that there's quality associated with your name and your brand.
Well, I appreciate that. One of the things I'm doing is I'll tell you 3 things I'm doing. A couple of years ago, I said I'm going to not work on Sundays. It's, because we've been virtual for a long, long time. And it's so easy to go downstairs on Sunday and go to work. I'm not going to work on Sunday. And then I said, well, I'm going to start my Sunday at noon on Saturday. I've never really been able to follow that. Okay. So now I'm saying I'm through every day about 3. I'm in California. So at 3:00, the East Coast is going home. The middle of the country, it's 5. They're about ready to go home. So I can quit because I need to spend more time with my wife. Okay. And that would be, that gives her day to do whatever she wants to do. But at 3:00, I say I drop the shovel. And I'm coming in. We do stuff. I think that's important. But the one thing I am really getting better at is I don't type the documents anymore. I let the people in my company do the workload, which trains them. I review everything, but I'm not a very good typist. I never have been. And so I think that's important. And the farther I get away from having to type the documents, the more time I have to do things like this with you.
Yeah. And I appreciate that. I'm glad you got that off your plate.
Yeah.
Because we need your expertise and your knowledge to be shared with the world.
So you're overly polite and over nice. And thank you very, very much.
No, thank you. And so that's it. That's a wrap, folks. Where can people get more information about you if they want to look you up, look at your YouTube channel? I guess I'm sure I got sent the links for that, but let us know how they should contact you.
Okay. Well, the firm's website is TrowbridgeLawGroup.com. That's a great place to start. My direct phone number in California is 949-855-8399. That's 949-855-8399. And you can get me by email, Gene@TrowbridgeLawGroup.com. And our YouTube channel is just simply Trowbridge Law.
Perfect. I'm definitely going to look that up. Okay. Well,
thank you.
Wow. No, thank you. I really appreciate it. Thank you for coming on. Everyone, I hope you picked up all the gems that Gene was sharing, because he really shared the wealth with us today. And I appreciate it. Thank you, Gene. Have a good evening.
Bye, Nicole.
Bye.
Did you love this episode of Share the Wealth Show? Be sure to connect with Nicole by following her on LinkedIn, Instagram, or Facebook. If you picked up any of the gems that were dropped by today's guest, make sure you not only put them in your bag, but if you know of someone who would benefit from this information, don't keep it to yourself. Share the wealth and make sure to leave us a rating and review. We'll see you for next week's episode. Subscribe so you'll be notified.